cryptocurrencies will eventually depreciate to zero. John Paulson amassed a $20 billion fortune in 2008 by correctly forecasting the collapse of the US housing market. He is now forecasting that cryptocurrencies will eventually fall to zero. Cryptocurrencies, regardless of where they trade now, will eventually show to be worthless, Paulson said in an interview with Bloomberg. When the euphoria subsides or liquidity dwindles, they will fall to zero. I would not advocate cryptocurrency investment to anyone. Despite Paulson's unfavorable position on crypto, he stated that the digital asset's short-term volatility made shorting or betting against it too risky for him. Finally, Paulson remarked, "Price variation is more about the coin's relative supply. None of the cryptocurrencies have inherent worth other than their scarcity." Paulson says he is counting on another alternative asset, gold, as a safe haven for the time being. Paulson's stance on cryptocurrency is in sharp contrast to the recent adoption of Bitcoin and other digital currencies by many of his hedge fund colleagues. For some of the world's most successful trading firms, the volatility in the price of cryptocurrency represents an opportunity to profit from arbitrage. Of course, Englander and Cohen may be aiming to make a fast cash, not exactly long-term investors in digital currency. "I would not encourage investing in cryptocurrencies," John Paulson stated yesterday. Meanwhile, established institutions such as Goldman Sachs and Citigroup have sought to increase their presence in the market. Goldman allows select clients to trade cryptocurrencies via a derivative instrument, and Citigroup is considering launching a cryptocurrency fund. Morgan Stanley was the first bank to provide clients the ability to trade cryptocurrency, and the firm is now putting its own funds in the speculative coin. The bank purchased over $250 million worth of Grayscale Bitcoin Trust just days ago. Even JP Morgan, whose CEO Jamie Dimon has previously referred to Bitcoin as a fraud, is now offering clients access to 6 cryptocurrency products. Others, on the other hand, align with Paulson and are avoiding digital money like the plague. Warren Buffett, one of the world's most renowned investors, has famously described cryptocurrency as likely rat poison. Buffett, chairman and CEO of Berkshire Hathaway, does not hold cryptocurrency and has stated that he will never do so. Charlie Munger, Berkshire Hathaway's vice chairman, has weighed in as well, saying, "I oppose a money that is so advantageous to kidnappers and extortionists." Other large brokerage houses are warning clients not to place their entire portfolios in the dangerous asset. Charles Schwab advises ordinary investors that cryptocurrency is a speculative asset and that there are no methodologies for determining its value beyond the trading value that we endorse or find persuasive. While Schwab provides indirect exposure to Bitcoin via several coin trusts, they caution users to consider the significant volatility and dangers associated. While cryptocurrency remains mostly unregulated, Congress, the Federal Reserve, and the Securities and Exchange Commission are all keeping a close eye on the business. Jerome Powell, chairman of the Federal Reserve, has hinted the central bank could issue its own digital money, possibly to compete with cryptocurrencies. Recent infrastructure legislation aimed to regulate Bitcoin by requiring everyone participating in crypto transactions to report them to the Internal Revenue Service. It is unknown whether or not this regulation will be implemented. Gary Gensler, the chairman of the Securities and Exchange Commission, has indicated that he will prioritize cryptocurrency regulation. Gensler stated earlier this month at a lecture at the Aspen Security Forum that cryptocurrency is rife with fraud, and that if we do not address the concerns, I am concerned that a lot of people will get damaged. Nonetheless, Gensler has failed to make precise ideas or even provide a date for when he will submit new restrictions. Bitcoin's notoriously volatile price has risen from roughly $10,000 in October to over $60,000 at one stage in April in the previous year alone. Bitcoin's price fell below $30,000 last month, but has subsequently climbed gradually above $47,000. Other cryptocurrencies have experienced much larger increases. Dogecoin, which is currently trading at roughly 3 cents, has increased by up to 400% in a single week. Cryptocurrency values are easily influenced by tweets from Tesla CEO Elon Musk, who has accepted Bitcoin as payment for Teslas at various occasions in the past. Mark Cuban, a billionaire investor, has a history of influencing cryptocurrency prices with his tweets. Dogecoin jumped after he stated he would accept it as payment for different things he sells as part of his Dallas Mavericks club. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.